So I asked ChatGPT, what question would it ask me? This is the question it came up with. Given the recent fluctuations in global markets, what are the top 3 factors you believe new investors should consider when diversifying their portfolio? How might those considerations change for more experienced investors? Brilliant question. Here's my answer. First of all, I think you should look at a lot of data. In other words, you should not just look for value stocks or growth stocks or income stocks or a specific geography and try and gamble on timing or a style or a geography. Instead, you should pick from a big universe of stocks, say 10,000 stocks, global, UK, European, US, and see which ones tick all of the style boxes. That way, you're not gambling, as I say, on time, style, or geography. That's the first factor. The second thing I'd examine, yes, there's worries about recession, but there's a dispute about that. Yes, we're in a rising interest rate environment. But given what I said to the first thing we should look at, and we're ticking all the boxes, I would pick not a diversified batch of stocks, but the very best few. In other words, about 10 to 20 stocks max from that initial list. For instance, at the moment in my portfolio includes Apple, Amazon, Alphabet, and Microsoft, as well as Nvidia from the start of the year. So that'd be the second factor, not actually to diversify, because diversification is often just a gamble against ignorance. The third thing would be, once I've done those first 2 aspects, is to monitor, maybe on a weekly or fortnightly basis, the stock, because obviously there are external market factors, war, conflict, rates rise more than we expected, or the market just takes a dislike and to technology stocks as it did in 2022 and drives them low. So I'd monitor those picks, and as a general rule, look to exit any stock which has dropped 25% from its peak. However, where the company is high quality, such as a Microsoft, I may overrule that rule and actually buy more of the stock. Or if I think it's very clear it could drop significantly, as it did in 2022, is exit and then buy back again. So there is a level of monitoring involved, but those would be the 3 main factors. Is that different to beginners as it is to experienced? Well, for beginners, I'd probably say if you want to have a light touch, and I'd put it into a tax-free wrapper like an ISA or a SIP or a 401k and just have an index tracker. If you're willing to have that index tracker for a long period of time, you might want a 2 times leverage one, though there is risk with leverage. A 2 times leverage S&P 500 ETF held for 5 years. However, as I said, there's risk with leverage. As I said, if you're more experienced, then you'd follow the answers that I already mentioned. I hope you found that useful and insightful. Don't forget to follow, like for more. Have a look at my Telegram channel where I give the weekly market updates and give you more insights from answers given by ChatGPT as opposed to me giving answers. Thanks very much and look forward to seeing you soon.